Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of September 18th through September 22nd, where we'll try to see, will the Fed hike or will the Fed hold during their Federal Reserve meeting this week? So again, we'll look at whether we think the Fed will hike or hold during their Federal Reserve meeting this week. So let's get started. So here's our Google document with our notes for part one of our weekly trading game plan for this trading week of September 18th through September 22nd. We keep our notes for our weekly trading game plans in publicly accessible Google documents, so you can refer back to them. We have bonus links to videos, links to all the tools, resources we use in constructing our weekly trading game plans in these Google documents, and you can find a direct link to this publicly accessible Google document in the description box below. We store all of our notes, Google documents for our weekly trading game plans in a publicly accessible Google Drive folder, so you can as well as previous weeks, and you can also find a direct link to that Google Drive folder in the description box below. Good morning, Alan Krantz. Thank you for joining us in the chat today. Hope you've been doing well. Good morning, Nug M. Thank you for joining us. Hope you've been doing well as well. So first we'll see how the markets ended up on Friday. So we can see Friday was a down day. Couple factors that may have contributed to that, a number of factors. It could have been the UAW strike, could have been exhaustion of the tech exuberance, AI exuberance with the RMIPO, could have also been the fact that Friday was a quad witching day, which meant that all of the options and futures contracts all expire on the same day. Regardless, we've got a pretty significant decline. Dow down almost 1%, NASDAQ down 1.5%, S&P down 1.2%. We can see in the heat map, mega cap techs took a hard hit, but pretty much everything was in the red with a few exceptions. Some health, UNH, Disney rebounded, AT&T, Oracle rebounded, etc. So we see we had 68% decliners, 27% advancers, only 28% new highs, 71% new lows. We've only got 30% above their 50-day moving average, about 70% below, and about 45% above their 200-day, 55% below. So again, ended up, very bearish. The week ended up very bearish after we saw, some of the tech exuberance with the RMIPO, etc. earlier in the week. Welcome, Walter Lyons, Ricky Khan, EC Mike. Glad to see you all. Thank you for all for joining us. Some recent news. Turkey could part ways with EU. Disney had a win. Is it easier to beat the stock market? I don't think so. Beyond the AI euphoria, worrying stock side. I also saw an earlier news clip, and we'll look at the futures in a little while, that Slovakia and a couple other of the Baltic countries were banning imports of wheat from the Ukraine. I'm sure that has to do with the Russia-Ukraine war, but again, we'll see what impact that has on the wheat futures. See, oil made a run up over 90, so it broke that resistance level at 90, been running up strong. We'll have to see how far it can go. Natural gas, again, been still pretty range bound between 250 and 3, has made some run ups around 275, 280, but again, still pretty range bound between 250 and 3. Gold did rebound. We'll see in the futures. It's getting resistance at 1950. It'll have to break through that to make an uptrend again. And we see all the futures indices pointing down. Euro is weak. U.S. dollar strengthened. Last I saw, I think it was up over 105. The DXY was up over 105. On euro weakness, yen pretty weak as well. And we saw that all the treasuries pop up over in the mid 4.4s, and we still got an inverted yield curve. So we'll look at the indices a second. Versus the SPY, S&P, we see it's, hugging that lower trend line of that upwardly trending channel from the near term. We now see again, as we pointed out last week, we've got this narrowing wedge occurring on the short term. Longer term, again, pretty much trading sideways, getting support. This moving average is coming closer now. So again, we expect that moving average to provide support. But again, with the Fed meeting this week, I would expect, a lot of wait and see occurring. So we'll probably trade laterally for most of the week. And again, we can kind of see that wedge on the long term. So I expect that to narrow, and we'll just kind of chop around within that narrowing wedge. NASDAQ, again, very similar, trading pretty laterally. The moving average is coming up to provide support. But again, it looks like that's also forming a narrowing wedge, and I expect, chop within that wedge, again, with that moving average coming closer and providing support. The Dow, trading much more laterally, again, got support from its moving average. Again, but similar with a narrowing wedge. Again, more chop in all the indices, and a narrowing range, less volatility probably, until at least we get to the Federal Reserve meeting. IWM, Russell, again, very flat. It's getting support from that longer term moving average. It's below the shorter term moving average. Again, very lateral trading. Don't expect a whole lot of volatile movement in IWM either at this time. The VIX did get a little bit of a pop on Friday. I think it broke 15 or so, but again, any pops are very quickly retracing. It had dropped pretty low. I think it was in the 12s at some point. So again, not a lot of volatility, not a lot of fear, even with the quad witching day on Friday and the declines in the indices. We're still not seeing an elevated VIX in the near term. Welcome, Douglas PC. Thank you for joining us. Hope you've been doing well. So we'll look at the groups and the sectors and the industries. So in terms of sectors, you see everything was pretty much in the red on Friday, but the least negative were basic materials and utilities. Basic materials got a bounce. Again, a little bit of a flight to safety in utilities. We can see utilities was the strongest sector for the week. So again, a little bit of a flight to safety. Real estate was not too bad in general. Again, basic materials, utilities, energy, not as strong, even though oil was up, over 90. Technology was the weakest on Friday, weakest for the week, even with the ARM IPO. For the month, though, energy was strong. Communication services for the month. Utilities positive for the month. And we can see basic materials moving up. Look at the industries. Welcome, the Crow, Flip of the Shippa. Thank you also for joining us. Hope you all are doing well. So we saw, a rebound in silver and gold, and we'll see that in the futures as well. So a pretty good rebound on Friday. Uranium's been strong. I saw Easy Mike pointed that out. Uranium continues to be strong. Coal was relatively strong. Solar continues to be weak. See, steel was weak. Aluminum's weak, so some of the basic materials still weak. Semiconductor equipment, we heard TSM is delaying receipt of some shipments of some semiconductor equipment, which bodes, a slowdown in the overall semiconductor industry going on in the future. So again, for the week, uranium strong, silver is rebounding, gold rebounding. Again, steel weak, semiconductor equipment For the month, again, uranium strong, coal strong, gold and silver moving up. We see some mortgage finance, broadcasting, some airline weakness, etc. Okay, let me open up the economic calendar for last week in investing.com. I'll grab a quick drink and we'll review the highlights of the economic data from the past week. We got quite a bit of important economic data the past week, and then we'll talk again about the upcoming Fed meeting and economic data for the upcoming week. Just a quick reminder, as the important economic data comes out, I try to capture that, typically from investing.com, and post it as quickly as possible in the Surf the Markets channel in our Discord. Our Discord is free to join. We encourage you all to join our Discord, continue in the chats and discussions and helping out your fellow traders in our Discord. You can find a direct link, a free invite to our Discord in the description box below. And as you can see, as the important economic data comes out, I try to capture that both in screenshot and in the detailed data in the Surf the Markets channel in our Discord. So again, quick way to find the important economic data is through our Discord. Easy Mike asks if I'm outside in the waves. Not right now. And the waves are picking up. So last week, not much Monday, Tuesday. Wednesday, we see mortgage rates went up a little bit. The important data was core CPI. Again, these are important inputs to the Fed's decision whether they're going to hike or hold in this upcoming meeting. We see the month-to-month core CPI was a little bit hotter than expected. The year average was as expected. Year to year in August was a little bit higher than expected with the non-core CPI, and the month on month was as expected. So the Fed tends to focus on core CPI and the fact that that continues to be hot. It's above their 2% target. That could be warrant them hiking in this upcoming meeting. Real earnings drop a little bit. So on Thursday we got jobless claims. So we see initial was below expectations, continuing below expectations. So again, the job market continues to be resilient. Fewer people filing claims, getting laid off, and it looks like some of the people that were previously looking are able to find jobs. So again, the Fed doesn't have to worry about the job market, unemployment too much. The job market continues to be resilient. And we got PPI, Producer Price Index, as expected. Year on year was as expected. The month on month non-core was pretty hot, probably due to increased energy prices. So we see once we take out food, energy, transport, it was still a little bit higher than the previous month, but less. Again, PPI year on year is a little bit higher than expected. So again, energy probably contributing to some degree. Retail sales was significantly stronger than expected. And I found that a little bit surprising. I guess the back to school sale did pretty well for the retailers. So again, the overall economy is being resilient. Fed doesn't have to worry too much about impending recession. So again, with the high CPI data, the high PPI data, inflation, could warrant, a further hike in the upcoming meeting. Friday, again, we had quad witching. We had all the options and futures expiring on the same day. Import-export prices. Import prices were down more than expected. Production wasn't bad. The consumer expectations numbers were a little bit interesting. Their one-year inflation is down below expectations, as well as the 5-year. So the consumer is not overly worried about inflation going forward. Their consumer expectations for September was better than expected, but sentiment was worse, and current conditions is worse. So right now the consumer's feeling a little bit worse, but their expectations going forward are a little bit better. So I'll quickly go through the calendar from last week, see if there's anything else that we missed. See the Treasury bill auction results. Crude oil stocks were as it would build. It was expected to decline, and still the oil prices surged up over 90. So talked about CPI. Again, inventory show a build, but again, so we have more supply, but oil prices continue to go up. Saudis have extended their cuts through the end of the year. Gasoline inventory's up, although gasoline prices are going up. Talked about jobless claims, talked about PPI and retail sales. Natural gas storage was up more than expected, and again, natural gas is still hovering between $2.50 and $3. It still kind of went up in general. We talked about expectations, consumer expectations, the Baker Hughes oil rigs. So we had a slight increase in oil rigs. So again, supply is increasing, which one would expect to capitalize on the higher prices, but the price of oil continues to go up. So that trend, that momentum continues, and would expect it to continue until something changes. So next week, got some housing data on Monday, building permits and housing on Tuesday, got mortgages on Wednesday, typical oil and natural gas. And then we get to the FOMC decision. So at 2 on Wednesday, we'll get their projections, we'll get their statement, whether they're going to hike or whether they're going to hold. You can see the expectation is for a hold here, and we'll look at this in more details in our strategy. And then at 2:30, Fed Chair Powell will come out, and in my humble opinion, I'm more concerned about what he's going to say than really the decision. And I'll withhold my opinion as to what I think they're going to do till we get to our strategy section. But again, listen closely to what he says. If they're still taking a hawkish stance, if they still think they have more work to do to bring inflation down, then even if we don't get a hike this month, it will be higher probability that we're going to get one going forward. So we get typical jobless claims on Thursday, natural gas storage, and then we've got, the Fed officials will come out and start talking again. So we'll hear their opinion on that decision, whether they all agreed or if there's some dissent, whatever their decision is. So we still got some earnings coming up. Should be, again, pretty much wrapping up. Got some biotechs, and you can go through the detailed list, see if there's anything that might impact your trading in investing.com. And again, I'll show you the short-term schedule in Webull in a minute. But again, pretty much wrapping up, not a whole lot. So again, just see if there's FedEx. So there will be FedEx, obviously will affect UPS, General Mills. So we've got some consumer staples, again, pharmaceuticals. On Wednesday, Rite Aid, some retail, But again, much smaller list. We're pretty much wrapping up this earnings season, and then we'll head into the next one. So again, Wednesday, 2 p.m., we'll get the Fed decision. 2:30, we'll get Fed Chair Powell coming out doing his press conference. Thursday, jobless claims data. Okay, let me grab a quick drink and we'll go look at the market screen in Webull. Let me check the chat, see if there's any questions to be addressed right away. Okay, this is the market screen of the online browser version of Webull. As you can see, they're still offering up to 12 free stocks if you open and fund an account in Webull. If you're not already using Webull, we use it for our market analysis, due diligence, the majority of our trading. And if you join with our affiliate link in the description box below, you'll also help support our BeachBum trading community, which we greatly appreciate. So we see Friday we had many more decliners than advancers, but the degree of decline was small, quite a few unchanged. The net inflow, this is a slight change from what we've seen the past several weeks as we've had an actual inflow into the NASDAQ. So even though the NASDAQ was down 1.5%, we actually had a net inflow into the NASDAQ. So that's interesting. And we had an inflow, but less so in the NYSE. So again, even though we saw the markets decline, we see a net inflow even going into the end of the day into both markets. So money's flowing into the markets again, even though the indices declined. So again, you can see a near-term calendar of upcoming earnings. We see Stitch Fix is coming up after market close on the 18th. You see who's before market open, after market close, AutoZone on the 19th, before market open, etc. So nice place. Here's GenFit during market hours on the 20th. So again, a nice place to be able to see the near-term earnings calendar. Look at the best performing industries for the week. Again, uranium's been strong, metals and mining positive, software kind of split, paper products positive, automotive a little positive, utilities again strong, electric utilities, investment, transport infrastructure is positive, looks like shipping, telecommunications, a little positive, and utilities, natural gas and utilities, water utilities. So again, you can see the trend in utilities and some energy, coal, uranium been strong. Look at the ETFs. So right now we've got short on the Q, short on S&P, bear on S&P. Again, short the Q, short small cap. So again, generally short the Dow, short the S&P, short mid cap. Who got up on the VIX. So again, even though the VIX didn't hold, its pop right now. We've got UVXY, which is up on the VIX. We've got a spike on the VIX, VXX. So small cap bear, so down on the Russell, down on small cap. FTSE China up, Europe up. Getting short S&P. So most of the industries again from Friday almost all red. So a little bit positivity in basic materials, uranium. Both those are uranium, lithium, some real estate, generally red. Commodities, again shipping, platinum had a rebound, carbon, silver, gold, shipping, silver. Got Asia 3 to 7 treasuries, gold hedged. So we can kind of hear the themes, right? Uranium, gold, silver, rebound, euro, and yuan positive, everything else negative. So we'll go over and check the futures. So again, we see, pretty flat, Dow pretty flat, S&P, we saw that roll over on Friday, so big red on Friday. But again, generally pretty flat. Looks like it kind of filled that gap, testing the previous support. More negative on the Dow, again, kind of filled that gap in the futures. And Russell pretty flat. See the Nikkei trended up. Looks like it tried to break through that resistance level. Looks like it's uptrending. Both the Euro and the DAX had a gap up. And then, retrace back down. So we'll see if we get a gap fill back down on the Euro and the DAX. So again, we've got some ETFs and some videos on how to trade the European stock market and the DAX that you can check if you want to see if there's opportunity to short. I believe there's one for Euro stocks. I don't believe we have one for the DAX. See that, momentary pop in the VIX, but again, those pops have retraced pretty quickly. We see how low the VIX got. So even after it jumped up, it trended back down pretty quickly. So again, the VIX hasn't really been able to hold much volatility. See just that, steady uptrend in oil, a lot of momentum, a lot of upward momentum. So again, now it's up over 90. We'll see if it goes to 95. Might get some oscillation around 90. Yeah, natural gas has been pretty range bound. It looks like it's looking for a steady state around, 250, 260. It popped up over 280, but pretty quickly retraced. And then we saw the bounces in gold and silver. And I wanted to point out this as well as these long tails in gold and silver. You see they both kind of didn't quite test their previous low. Low on gold was in the 1920s, low in silver about 2250. But when you see that long tail wick, looks like a capitulation of the shorts. And then we got that nice bounce. So again, if you're a short-term trader, day trader, etc., these might be opportunities to play those kinds of bounces in gold and silver. And again, we've got several ETFs to both long and short gold and silver. Again, if you're a short-term trader, I know gold long is GDXU, silver is AGQ, short silver is ZSL, and there's several shorts on gold. See a rebound in copper, rebound in platinum, up in palladium. Corn's been very flat. And then it looks like we're getting a swing back up in wheat, and we'll talk about our trade in the ETF for wheat, WEAT, that we recently entered. So again, we'll talk about that trade tomorrow. Lumber kind of bottoming, And again, the general trend for treasuries has been down. We get a little bit of volatility. And again, we see the dollar strengthened up over 105. Again, generally that's downward pressure on your dollar denominated commodities. But they didn't seem to react as much to the dollar strength initially. Again, we see weakness in the euro, weakness in the yen, British pound, a rebound in the Canadian dollar. So I hope that all helps. Okay, I'll come back to our ETFs. I want to talk about our strategies. Let me grab a quick drink, and we're going to look at the Fed rate monitoring tool and also the CME Fed Watch tool. And you can see we have videos on how to use both of these tools, and you can find those, a direct link to those videos in our notes document and also on our BeachBum Trading YouTube channel. So let me grab a drink and I'll bring up those tools and we'll talk about will the Fed hike or hold in this upcoming meeting, as well as we'll look at future meetings as well. Okay, first we'll look at the Fed rate monitoring tool, which you can find also on investing.com. So we've got a countdown to the Fed decision. So if you forget when that is, you can also find the countdown on these sites. We can see for September, the upcoming meeting on September 20th, they're showing a 98% chance of a hold. So the Fed rate monitoring tool is predicting that the Fed will hold in the September meeting. Almost, only a 2% chance they're going to hike. Obviously, there's nothing for a cut. We look forward to November. We see there's still a 72% chance that they're going to hold. 27% chance that they're going to hike a quarter, and almost, negligible, less than 1% that they're going to hike half a point. We go up to December, we still got a 60% chance they're going to hold, only 34% chance of a 25 basis point hike, less than 5% of a 50. And if we even go all the way into January of next year, still 60% chance of a hold, slight chance of a cut, and slight chance of a 25% 25 basis point hike. So again, the Fed rate monitoring tool right now is clearly denoting a hold all the way into early next year. You can also see how these probabilities have changed over time in the Fed rate monitoring tool. So you can see the probability of a hold has steadily gone up, even though we got that hot CPI and PPI data. The probability that the Fed's going to hold this week has gone up. So again, Fed rate monitoring tool is very clearly showing that the Fed is expected to hold. We look at the CME Fed Watch tool, see if that corroborates with the Fed rate monitoring tool. Again, you can see the countdown time to the Fed decision, see what the current rate is. And then we can see for September, again, a 98% chance they're going to hold, only 2% chance they're going to hike. Again, you can quickly jump to future meetings. We can go to November, and we 72% chance hold, 27% hike. December, again, 60, 34, only 34% chance they're going to hike. And again, all the way to January, again, 60% chance of a hold, 30% chance of a hike, 4% a cut, 5% a 50 basis point hike. You You can also see the probabilities for each meeting as well by clicking on the probabilities. And again, we have a more detailed video on how to use each of these tools that you can refer to via the link in the notes, as well as on our BeachBum Trading YouTube channel. So just in my humble opinion, even though both of these tools are clearly showing a hold, that the Fed will hold through the end of the year, even into next year. And again, just a reminder, none of our content should be considered financial advice. We're not financial advisors, or this is all for education. All of our content is for education and entertainment purposes only. My personal opinion is that we're going to get a 25 basis point hike sometime before the end of this year, whether we get it this week or we get it in November, or the end of October, November. You can see the next meeting is at the very end of October, early November. I think we're going to get one more 25 basis point hike, and we might get it this week. Now, again, this is my humble opinion, but I would recommend that you be prepared if we get a surprise this week and the Fed does come out and hike 25 basis points. Please position your portfolio accordingly so that you're not hurt if we get that surprise 25 basis point hike this week. Again, my humble opinion, I think the CPI and PPI data being hot and above their 2% target could warrant that hike at this time, or they could put off, to the next meeting and see if it continues to be hot. So again, that's just my opinion. You all love to hear what your opinions are, if you agree, disagree, and if so, why. Just a reminder, you can also find links to these tools, the CME, FedWatch tool, etc., and the Fed rate tool in the links section of our homepage. Our homepage is beachbumtrading.com, bum without the U, and you can find links to all of our tools, resources, etc., that we frequently use on our homepage. So some additional strategies we've talked about. We've got bonus links or links to these videos in the notes, as well as you can find them on our BeachBum Trading YouTube channel, is how to make money trading in September. Talk about the September effect. Again, September is historically a down month. So again, we expect, September to be a negative month. We also talked about the summer. Now I'll jump over and go back to ETFs. So if anyone in the chat has a particular index, category, topic, commodity that you want to look at ETFs, we can do that. I'll bring up our ETF Google Sheet. We'll look at the technology component sectors. I'll probably do that first. Just a quick reminder, if you want 24/7 access to our ETF Google Sheet, be able to find ETFs to support whatever trading strategy you want to use. You can gain access, 24/7 access to this Google Sheet, as well as our dividend payers and our puts ROIC Google Sheet by joining our Patreon at the All Access and VIP level. You can find a link to our Patreon in the description box below, and also, again, help support our BeachBum trading community, which we greatly appreciate. So again, I look at the technology components. I thought there was some interesting behavior here, particularly with the ARM IPO, etc. And again, you can find this screener as well as a number of other screeners we use in the screeners tab in our Google Sheet. Hopefully these will all help you identify opportunities for your trading. This was interesting. I thought it's the FANG U's. You can see the FANG stocks are pretty much holding along that upper trend line in this declining channel. Again, we see that narrowing wedge, but again, they're holding that upper trend line pretty well. Biotechs uh, bouncing off that double bottom. So, but you see, there's in a narrowing wedge as well, but there might be some opportunity. I looked at LabVIEW; it's a little above its previous bottom, but again, might be some short opportunities in biotechs if you see those start running. SOXL, so semiconductors broke down below the lower trend line of their channel, so it's probably going to test that previous low, and then we'll see if it declines from there. It's got some room to fall from there, so that might be a risk for semiconductors again if you're looking to short, and it does break down further. SOXS is the inverse of SOXL. And again, the overall NASDAQ TQQQ seems to be, again, testing that upper trend line. So I would expect it, but it's a downwardly sloping upper trend line. So I would continue to see bounces and to see those bounces get sold off of that upper resistance. So I thought that was kind of interesting. Again, short-term trading might be some opportunities you can identify, day trading, etc. So I hope that helps. So flip of the ship is talking about XBI for biotech. So if we look at biotech, again, LabVIEW, you can see it's pretty close to its 52-week low. So you can see the risk-reward profile there. China. Again, China's typically pretty volatile, so we typically trade China short-term yen and yang. So I know several of our BeachBum traders make money trading China with yen and yang. Again, Europe, if you want to trade Europe, long or short. Got a couple ETFs there. Here's the FANGs. Again, FANG-U and FANG-D. Again, plenty of opportunities to trade gold. Again, short-term trading. You see what leverage, etc. Gold miners, etc. Saw lumber, but it's still significantly above its 52-week low. So even though it looks like it's bottoming on the chart, still got some risk. Again, natural gas, short-term trading, cold and boil long, cold short, or UNG, UNL long. Oil, again, drip short, gush long. Again, I don't see a top yet in oil, so just be careful. Again, short term, you can probably make some money trading those, or UCO long, SCO short. Again, for semiconductors, SOXL long, SOXS short, so you can see the risk reward profiles on those. We talked about silver. Again, silver long, AGQ, short ZSL. We've also got some miners, long-term ETNs. Looked at these solar. You can see these solar ETFs are pretty close to their 52-week low, but the sentiment generally and the risk-reward profile is not all that great. So even though it's down quite a bit, I'm not overly eager, and there's issues with financing solar. You'll hear people talk about relative to end phase, etc. Treasuries, again, the trend's been down. We've talked about this for several weeks. It's approaching its 52-week low. And again, we've talked about this seasonal trend that we're watching in the treasuries. TLT we're watching. Also, we'll talk about the dividend payer version of that tomorrow as well. And again, uranium's been strong. We've also talked about this trend in utilities we've been watching. So XOU, we saw, that's so it's bounced back up. We'll see. We'll look at this tomorrow with UTSL. We might have missed the bounce in utilities. It may have bounced earlier than I expected because UTSL, XOU seemed to have bounced and headed up. So again, might be a momentum trade. And again, UTSL is leveraged on utilities, so might be an opportunity there. Again, we talked about wheat, and we'll talk about our trade in WAT in more detail again tomorrow. So does anybody else in the chat have any other ETFs, categories, topics, etc. that you'd like to talk about today? I could take a look at those. If I missed your comment or your question, please repost it and I'll take a look at those. Again, tomorrow we'll talk in more detail about dividend-paying stocks, dividend-paying ETFs. We'll also talk about our option strategies. We'll be using all of this data to select our top swing trading stocks to watch, stocks in our bullpen, shopping list, and again, other opportunities to make money while we wait for better swing trading opportunities to present themselves. So again, Easy Mike's pointing out TBT, which is a short ETF short on the treasuries that we pointed out. So again, you can get access to this Google Sheet, use it to identify opportunities, long or short, any of these categories, any of these topics. So if you're looking for, a short on treasuries, here's a short on the 20 years. So this is a leverage short on the 20-year treasury. It's kind of the inverse of TMF. You can also see different durations on the treasuries. And again, we've been talking about that downward trend, seasonal trend in the treasuries. We're watching TLT for a bottom and a swing back up. And obviously that has a lot to do with the Fed's decision whether they're going to hike or hold. So if they hike, treasury yields go up, prices go down, TLT goes down, TBT goes up. So Flip is pointing out wheat. Yes, again, we'll talk about the position we took this week in WEAT. And we saw it looks like wheat swinging up. So again, if you have any further questions or suggestions about how we may improve our weekly trading game plan videos, any of our videos, any of our tools, resources, community, please post them in the comments of this video. We're also in our Discord. Again, you can find an invite to our free Discord in the description box below. Also in the link section of our homepage, beachbumtrading.com. Find links to our Discord. We also have a Reddit community, a Facebook group, and you can find links to all of our social media sites. So plenty of ways you can ask us any questions, make any suggestions. We also have a suggestion box in the Discord, so you can let us know, what can we do to add value for our BeachBum traders, all of our BeachBum traders, and our BeachBum trading community. So please let us know. And again, if I missed your question, please feel free to post in the comments or again in the Discord, etc. And we'll try to follow up and answer those questions as soon as we're able. We hope that you like all this content. We'd love your help and support in continuing to grow our BeachBum trading community. If you'd smash the like button, that will help the YouTube algorithm hopefully share our content with more of your fellow traders. And also please invite your fellow traders to join us here in the live chats, join us in the Discord. the more people we have helping each other out, different trading styles, different trading ideas, mutually benefits everyone in our community. So we greatly appreciate you helping to continue to grow our community and for all of your support. And we hope you all will come back again tomorrow. And again, we'll be using all of this data that we collected to select our top swing trading stocks to watch and stocks in our bullpen, etc. We'll talk about additional trade ideas, trade strategies, both for swing trades as well as making money with dividend payers, option strategies, etc. So again, we hope you'll join us again 10 a.m. Eastern on Sunday for part 2 of our weekly trading game plan for the trading week of September 18th through September 22nd. And then we'll see this week, will the Fed hike or hold? And we'll see whether those Fed rate monitoring tool probabilities, etc., are correct or not. So thank you again for joining us and for all of your support, and have a great day.